As you may have already heard, timing the market beats timing the market. What this means is that instead of trying to predict when the market will rise or fall and gain from those, it's better to simply invest as often as you can, and in the long run your portfolio will grow in value. This process of investing continuously over a period rather than a lump sum at start is known as drip feeding or dollar cost averaging. Why is this important, you may ask? Well, I assume most of us have a regular income, usually from work. This means that a lump sum upfront investment is not an option unless you've been saving money for a while, in which case you may want to reconsider, especially with high levels of inflation and the opportunity cost of this sum of money. Think how much returns it could have generated if invested. So for the majority of us, we receive a regular income and need to invest on a regular basis. But how often should you drip feed? Should you invest every day, week, month or year? That's a question I had and I decided to look it up online. Unfortunately, I couldn't find the answers I was looking for. While I did find articles online, they were mostly looking at a single index fund, usually at a longer frequency of months to years. And also they usually compare the result against lump sum investing, which for the reasons mentioned earlier is unlikely to be an option for most people. What if you have a portfolio of stocks and you wanted to know what would have happened if you drip fed your income at different intervals, say monthly or yearly? Well, I wanted to find out, and since I couldn't find a resource to test this, I decided to build a tool to do this. Before we look at it, however, we have to assume that in this experiment, and I stress this is an experiment, there is no dealing commission, that is, trades can be placed at zero transaction cost. Otherwise, it just doesn't make sense to invest in very short time intervals, as the costs will probably outweigh any benefits. Also, I assume that investments are made at the beginning of the period. So for example, if the investment frequency is monthly, then the investments are made at the beginning of the month. Same goes for weekly and annual frequencies. This means that there might be a slight bias towards annual drip feeding because there's more of a lump sum invested earlier rather than spread out across the year. We'll come to that towards the end. I was also careful to make sure that the total sum invested on the horizon are the same or very close across each frequencies. Otherwise, you'd end up having discrepancies over long periods because 1 year is not exactly 52 weeks. Or in the case of daily frequencies, you have to account for holidays and leap years, etc. But enough of that, let's see what the results look like. So for example, let's say you get £10,000 a year to invest and wanted to find out if it would have been better to drip feed on a daily, weekly, monthly or yearly basis into a specific stock or index fund, say Vanguard's S&P 500, or any S&P 500 index fund for that matter. Looking over a period of 10 years from 1 January 2012 to 31st of December 2021, we can see that the best performance was achieved on an annual drip feeding basis, then monthly, then weekly and finally daily. Essentially, the more money you can front load, the better the final income. Which is why you often hear people say, don't wait for the right time to invest, you might miss your opportunity. And if you wanted to compare how the S&P 500 would fare relative to the FTSE 100, for example, you can see there's no comparison. And again, interestingly, the front-loading effect is also present. And in this case, the annual drip feed is best followed by the monthly, weekly and daily, just like we saw earlier. This is an interesting effect actually, and it's something I will explore further in another video. And I say that because let's not forget I only use the S&P 500 here, and this front-loading effect may not hold true against all stocks and all market conditions. So make sure you subscribe to the channel so that you don't miss the video. And as always, thank you for watching and see you next time.